Thank you so much for joining me on the show today, Tosin.
Thank you for having me.
All right, then. So first, let me start up with the PMA from yesterday. How was that received?
So we noticed the auctions came out at 2%, 2.9% thereabouts for the 91 days, 3% for the 182, and then 5 for the 364, which are low levels if you look at where we're coming from a year ago, but then not so low because of recent developments since the central bank removed OMO as an investable asset for local investors. Demand pressure is sustained from all the retail investors looking for where to put their funds, as well as institutional investors that were previously trading in OMOs. But at these low levels, we still think that is too low to be sustained, especially if you look at it in relation to where inflation is in the country. The DMO recently had a meeting with PDMMs and other core investors on Monday and Tuesday, where they outlined their plans, their borrowing plans for the year. They acknowledge that while this environment is very good for them in terms of reducing borrowing costs for the country, they understand that it's not sustainable at these levels, and would expect that yield should come up at some point later in the year.
Yeah, but are we going to expect some more concrete steps taken from such meetings, or is it just another talk show from the DMO meeting key stakeholders?
No, so I think what the major part of the meetings was for them to outline what they plan to do this year. And if you look at what they presented, you can see that the DMO is getting very, very creative with the methods which is using to fund the budget and other obligations due to the government. They're issuing green notes, euro bonds, promissory notes to oil exporters and other commodities exporters as well. So they're just looking for different means to handle all the different obligations due. And along with their plan, it looks like they're trying to borrow as much as they can now with this low rate environment. They're looking to borrow as much as 539 billion in the first quarter alone for federal government bonds, which is much higher than other quarters combined. They're also going to issue a new 15-year benchmark bond. They're going to issue a new 30-year benchmark bond. They're going to issue a green bond. They're going to issue euro bonds. So you can tell that they are taking the most. They are the ones that are enjoying this low rate environment, and they're taking the most of it and the most advantage of it.
All right then. But looking at the bond auction expected next week, how do you call that?
So the bond auction, we expect the DMO to be a bit aggressive in terms of the amounts they're going to sell and the rates at which they'll sell. While rates in the market would continue to be pressured because, again, the institutional investors are pressured as to where to put their funds. They have OMO maturities on a weekly basis, and coupled with about 224 billion in coupons they will receive this month, and about 606 billion that will mature in 13th February bond. So they always have that demand pressure, or that pressure as to where do they put their funds in. So you expect that demand would always be consistent in the market, and that rates would be pressured. The DMO will take advantage of that, and at the auctions, I expect to see them borrowing even more than they had put out for on offer, to take advantage of to just take up as much as they can, especially with their plans to do so in Q1.
All right, but very quickly, your calls for inflation next week and then the MPC meeting.
Inflation should still be. We still expect inflation to go up slightly, maybe about 50 basis points. The MPC, we're not expecting much changes from them. The change that the CBN has put in place, taking out the OMO for the local investors, keeping it for just the banks, has worked largely in favor of the government. Like I said, it's reduced the cost of borrowing. It's also helping the CBN to manage its balance sheet and reduce as much OMO that is issuing on a weekly basis. It's allowed them to use the OMO as a liquidity management tool, which is its original purpose now. So it's no longer just like an investing tool. And then, so they would we expect that they would maintain their current indices, CRR, liquidity ratio, and MPR, and then look how these things are affecting, and expect, because the major thing of the CBN is for this to affect the economy, right? To bring down borrowing costs and all those things. Exactly. So they will look for the effects of that.
Still quite interesting times, and we'll see how all this play out. Thank you so much for your time. I've been speaking to Oluwatosin Ayanfalu. He's a fixed income dealer at ZEDCREST.